Hello everyone, and welcome to Ava Talks Crypto. I'm Ava, and I'll be bringing you all the hottest and latest stories happening in the crypto space. Our headlines for today are: how Wall Street is becoming the savior of crypto. Bitcoin and Ethereum on track for their strongest weekly gains since March. Crypto.com receives regulatory approval to offer crypto services in Spain. Token issuers in Japan exempt from 30% crypto tax on paper gains. How much would you get for a $100 investment if Shiba Inu hit $0.001? For our first-time viewers, Ava Talks Crypto is a channel dedicated to delivering all the hottest and latest news happening in and around the crypto space. We also upload daily market report videos for people who want to take a closer look at the crypto market to formulate trading strategies for Bitcoin, Ethereum, and trending altcoins. Before we begin, you can support what we do by giving this video a like and subscribing to our channel. Doing these simple things goes a long way toward helping our channel and encouraging us to make more quality content for you to enjoy. Let us know what you think by leaving a comment below. You can also share our videos with your friends who may be interested. Don't forget to hit that bell icon to get notifications whenever we release new videos and be one of the first to watch our videos. Now, let's move on and discuss the latest headlines. Let's dive into a fascinating news story that highlights the innovation in cryptocurrencies. Lately, some of the biggest names in finance are making new bets on crypto. This adds competition and momentum to an industry that is under increasing pressure from US regulators. BlackRock, the world's largest money manager, is on its way to start a new exchange-traded fund, or ETF, and will be using Bitcoin as an underlying asset. The other two major money managers are Fidelity Investments and Charles Schwab. Both are backing a new cryptocurrency exchanged with Citadel Securities. Deutsche Bank is also considering operating a crypto custody business, which would hold digital assets for its clients. Deutsche Bank is one of the world's largest lenders. These institutions have a track record on Wall Street, and their growing interest in including cryptocurrencies in their business models is having a major impact on the crypto industry. Through these institutions, we are seeing a push on the value of cryptocurrency, especially Bitcoin. On Friday, Bitcoin, the world's largest cryptocurrency, rose to its highest price in a year. It was seen trading at more than $31,000. From the beginning of the year up until Friday, Bitcoin had risen 81%. Other cryptocurrencies also surged this week, including Ethereum and Avalanche's AVAX token. The total market capitalization of crypto assets reached $1.2 trillion on Friday, which is 14% higher than where it was a week earlier. The new interest in crypto from mainstream financial institutions comes at a time of rising peril for an industry that has struggled to regain its footing following the implosion of the FTX cryptocurrency exchange and the regulatory crackdown that followed. Earlier this month, the SEC filed lawsuits against the largest crypto exchanges in the United States and the world. Coinbase and Binance were alleged to allow digital currencies to trade on their platforms, which should have been registered with the SEC. The SEC lawsuit stoked new concerns that it would make it more difficult to trade certain digital assets. However, in a surprise turnaround in sentiment about the crypto industry, BlackRock filed paperwork with the SEC to create a spot Bitcoin ETF. Such a fund would be tied to the value of the original digital asset instead of merely tracking Bitcoin futures. In the paperwork, BlackRock specified that Coinbase would be the custodian for the Bitcoin holdings. According to BlackRock's head of strategic partnerships, Joseph Shalom, he thinks that we need institutional custodians to step in, play roles, and participate in digital token economies. Since BlackRock's application for a spot Bitcoin ETF, Bitcoin's value has soared. Other players, such as Invesco and WisdomTree Investments, quickly followed in BlackRock's footsteps and renewed their application for a spot Bitcoin ETF, which they previously submitted to the SEC. Historically, the SEC has denied 27 prior applications to create spot Bitcoin ETFs, arguing the products are vulnerable to market manipulation. However, BlackRock's filing has certain conditions that would make it safer and more transparent, which will prevent market manipulation concerns. Up next, we have Bitcoin and Ethereum are on track for their strongest weekly gains since March. Last week, we saw crypto prices surge since BlackRock filed for a spot Bitcoin ETF. Of the 149 assets in the CoinDesk market indices, 144 of those have experienced a surge in prices in the market. Bitcoin was nearing its first losing month of 2023. However, it is currently hurtling towards its strongest performance since March. Ethereum is following suit and has yet to post a losing month for the year. Trend indicators are now signaling that Bitcoin has entered a significant uptrend phase, following last week's 15% increase. According to experts, bullish catalysts over the past 2 weeks have started to thaw the crypto winter. The catalysts include Bitcoin and Ethereum's omission from a list of digital assets mentioned in the US SEC lawsuits against crypto exchange giants Coinbase and Binance. More recently, the spot Bitcoin ETF fillings by BlackRock, WisdomTree, and Invesco have increased confidence in cryptocurrencies. The question now is whether crypto prices can maintain their momentum. Bitcoin has breached the upper range of its Bollinger Bands on 4 consecutive days. Traders are viewing this as an opportunity to take profits. In other news, Spain granted regulatory approval to Crypto.com to offer crypto services in the country. The regulatory approval for Crypto.com comes within weeks of acquiring a major payment institution license from regulators in Singapore. The Singapore-based crypto exchange has obtained a virtual asset service provider license from the Bank of Spain. With this regulatory approval, it allows the crypto exchange to offer a range of crypto-focused services to Spanish customers. Historically, Spain is a country that has recently taken a positive approach to crypto. However, Crypto.com still had to perform a comprehensive review of its anti-money laundering directive compliance and adhere to financial crimes laws before getting approval from the authorities. Chris Marsalek, the CEO of Crypto.com, called its entry into the Spanish market their commitment to compliance. The latest regulatory approval means that Crypto.com is a regulated platform in nearly a dozen countries. Apart from Spain, the company has obtained regulatory approvals in Singapore, France, the UK, Dubai, Australia, Greece, South Korea, and the Cayman Islands. The company is also in a pre-registration process with the Ontario Securities Commission and Canadian Securities Administrators. Up next, token issuers in Japan will be exempt from a 30% crypto tax on paper gains. Japan's National Tax Agency published a partial revision of its corporate tax guidelines and implemented new tax rules for token issuers. Token issuers in Japan will no longer be required to pay corporate taxes on unrealized cryptocurrency gains. The tax exemptions go into effect nearly 6 months after the Japanese government approved a proposal that eliminates the requirement for crypto firms to pay taxes on paper gains on tokens they hold and issue. Japanese legislators have been discussing the new tax rules since August last year as part of a much broader tax reform for 2023. The tax authority only gave its final approval last week. Under the new rules, Japanese companies that issue tokens will be exempt from paying a 30% corporate tax rate on their holdings. The ruling Liberal Democratic Party stated that this new tax rule will make it easier for various companies to do business that involves issuing tokens. The crypto industry in Japan has been undergoing significant changes lately. Since June 1, the country has been enforcing stricter anti-money laundering measures to trace crypto transactions to align Japan's legal framework with global crypto rules. To wrap things up, people are asking how much they would get in return if Shiba Inu hit $0.001. At the moment, Shiba Inu is still holding on to the dream of ultimately hitting $0.01. How much would this yield if you invested $100 in SHIB today? The Shiba Inu community hopes to witness the asset reach $0.001 in price. While this price goal seems highly ambitious, investors are wondering how much of an impact it would have on their investment. Recently, Shiba Inu plummeted to a shocking low of $0.0000543 on June 10. However, a $100 investment would have given investors a massive 18.42 million SHIB tokens. If Shiba Inu attains their target of $0.01 value, this will translate to a 12,447% return on investment. This means that the $100 investment will ultimately become $12,547. Should this materialize, an investor would have raked in over $12,400 in profits with an initial $100 investment. Experts say that it is possible for Shiba Inu to hit its $0.001 goal. However, investors should be cautious that this kind of rally for Shiba Inu remains unlikely given the conditions in the market today. It's possible for Shiba Inu to attract demand with the number of initiatives they have recently taken. Notably, A more realistic price target for Shiba Inu is its all-time high of $0.00008845, which it attained in October 2021. If this happens, the $100 initial investment will yield $1,059. At the moment, Shiba Inu is changing hands at the $0.000797 level. It's currently looking to seal its position above the $0.00008 level. These are all the latest news stories we have for you today. Don't forget to check out our daily market report videos for a more in-depth look at the crypto market and to develop trading strategies. Again, this is Ava, and you've just watched Ava Talks Crypto. Thank you, and have a great day.